Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to refer your network to this channel so that YouTube will push us to a high level of audience. Okay, today's video we shall be discussing calculus of resistance, support, trend line, RST, price range in Forex synthetic market. So this is the topic we're gonna discuss. But before I go into the practical applications of this topic on trading chart, I'm going to explain this document. So resistance is the resistance R is where the rate of change of price with respect to time is 0. So P is price and T is time. So the rate of change is dP dt equals to 0, and price is maximum. Okay, price is maximum. Price is at highest point. Okay. Support S is where the dP dt is 0 and price is minimum, that is at lowest point. Trend line T is where the BTT, that's the rate of change of price, is K, where K is constant over some finite time interval. Okay, if K is positive, it creates impulsive buy signals, and if K is negative, it creates impulsive sell signals. Okay, the R, S, and T are functions of time, and hence they take various values. It's not just one value, so that's why we have a resistance zone. Okay, like the range, the prices, the range of prices over which market cannot go beyond or go below, and then there is a time range for such. Okay, so R, S, and T are functions of time and price. So the resistance R is f of P slash T for 0 less than T less than TR, where TR is the final time of the resistance, like the final time for which, or the maximum time for which the resistance lasted. Okay, then S is f of P comma T for 0 less than T less than TS, where TS is the maximum time for which the support lasted, for which the support event lasted. Then T is f of P comma T for 0 less than T less than TT, where TT is the maximum time for which the trend lasted. Okay, now what is signal? Signal is f of R comma S comma T comma small t lowercase t upon n. Now the n is a kind of unit vector. This is a unit vector, like a directional stuff acting in the direction of the rate of change of P with respect to time. So it's acting in the direction of dPdt. So dPdt can be positive, it can be negative. So okay, so when dPdt is positive, then n is acting upwards, and when dPdt is negative, n is acting downwards. So if you take second derivative of price with respect to time, it should not be 0. So less than greater than means it is not equal to 0. Okay, so now the area is proportional to volume. So the area shows how big a candlestick is, how large a candlestick is, or how small a candlestick is. You can see that there is nothing, it is on the 2D chart. Okay, it's a 2D stuff. Candlestick is a two-dimensional stuff, so it have a width and a height, but there's not like thickness. So that's why the volume is proportional to the area is proportional to volume, and it is the integral of time, or I'm sorry, is the integral of price over time. Okay, But in reality, volume or area actually represent the number of participants in the market. So if there are higher number of buyers in the market, we can say that um, the, the, the buyers have the highest volume, and if there is highest, if the sellers are higher, the sellers have the highest volume. But if you sum the number of buyers and sellers, that is overall volume in the market, and that has a lot of stuff to offer. It affects the volatility, it also affects the liquidity. Okay, so I don't want to go deep in the aspect of areas and volume, but the area of resistance, support, and trend line is the major thing in this topic. Maybe in future I can talk more on area and volume. So let's go to chart and start working on this stuff. Okay, let's start with forex markets. For instance, um I'm going to pick one asset that is generally traded. Let's consider US oil. Further, we consider GBP USD. Okay, but let's consider oil, then we go to synthetic market. Okay, let's consider oil. So this is oil. Okay, now you see, remember that, let's go back to the topic again. So see, the topic had been changed a little bit to vector calculus of resistance, support, and trend line. The essence of changing it, adding vector there is so that we don't just study the rate of change, we also consider the direction. So we use the properties of rate of change, the information from the rate of changes, the critical points, and then we use those information to predict the direction of the market. Okay, if there is no direction, you lose more money, because if you don't have a direction, the market will just go in a direction that is against you, because it's not by chance. You have to know it, you have to understand it, you have to believe it. If you are doing it by chance, sometimes you win, sometimes you lose, sometimes you profit, sometimes you lose, and your statistical edge will be either neutral or negative. And negative means no matter how you deposit. Neutral or negative means no matter how you deposit, you either lose all or you recover your capital, which is not the reason why you're a trader. That's why WINFX trading existed, to optimize the number of traders to more than 90% winners. Okay, so I will start this work because this is more of mathematical something. Okay, but I'm not going to solve anything, but I'm going to explain it and crack it to a layman's understanding. Okay, so top-down analysis is needed. You have to know what the market has for you from the highest time frame to the lowest time frame, and then know who is dominating the market. You have to do your top-down analysis, get the direction from the month, plot the key levels in the weekly and daily, go to H4 and H1 for entry, and then M30 to M5 for refinement, like for sniper entries. Okay, uh, so like not necessarily sniper entry, but for refinement, so that you can get a kind of higher risk reward. But if you are looking for sniper entry, you should actually come from higher time frame. So in higher time frame, you can see algorithmic levels where prices are going to, you know, like break out or change direction with little or no drawdown. But why you go to lower time frame is like where you go for refinement, like going to time frame lower than M30 is to increase your risk reward, like to know where your SL can be so that you can get higher risk reward. But don't allow your risk reward to let you uh, lose or have a negative statistical edge. Okay, so that is by the way. So let's continue this, because I think if you are having it, like if you are having a lot of difficulty trying to make money in this market, you really need to subscribe to our VIP so that we can do the work for you, and then you can learn for mentorship, enroll for mentorship and courses, and then you can be okay. Okay, so let me start with the monthly time frame. This is oil, so I'm starting with the monthly time frame. So in this monthly time frame, what I need to do is to plot the resistance, plot the support, plot the trend line. Okay, and I'm going to do that based on the environment, the current event that is happening in the market. That's how I'm going to do it. So what is resistance, support? Remember that a resistance is where the rate of change is zero, and support is also where the rate of change of price with time is zero. So in other words, price reach those area and stop moving and change direction, right? So this is a resistance, because resistance is at a maximum, at a higher point, right? That's why I place it there. And this is a support. Okay, if you read the document, you understand what I say. And then you can see that this can be represented with a mathematical function, because it's not just a horizontal line, it's a rectangular stuff, meaning that this, we can actually represent this with a mathematical function. From here to here is a function, then from here to here is a function, and they all depend on time. But we're not going deep into that. Okay, so the same thing with this. So this is resistance, support, this is resistance. Now the next thing, do we have a trend? A trend is a straight line, not a zone. A trend is a straight line that incline at certain angles to the horizontal, but the tangent of that angle can be negative or positive. So that is where rate of change comes in. When the rate of change of a straight line is negative, the market is downtrend. When it is positive, the market is uptrend. Now, how do we first? We have to first of all plot this trend. So you look for turning point, and then you look for another turning point, and then you join them together. Okay, so we have, there is one turning point there, and there is another one. So remember, this is monthly, so we join it. As we have joined this, we now discover that if price approach this trend line, there is probability of generating a sell signal, but that is not the only criteria to generate a sell signal. The support, the rate of changes at support, like that should be region in the chart where the rate of change of price are basically zero, and that is where you are going to be planning for your entry. And this derivative, like this rate of change, actually varies from time frame to time frame, but they must be zero. Like that, in other words, there are infinite support and resistance depending on the time frame of an analysis. Like depending on the time frame you are checking them. What this is telling you is that you should look for the measured resistance and support functions and try to work with them. Okay, so right now we step down to the weekly time frame. So in the weekly time frame, you can see you can see that really there is a massive sell from this place, this resistance. There's a massive sell. Okay, and there is a need to extend our support zone. Like there is a need to extend it a little bit to here, simply because price reached there and drop. So there is a shift in the support zone. So there is a shift, I mean in the resistance zone. So our resistance function, there is a shift. And so you see that price get there and start coming. Okay. Now we have done this in the weekly. So the weekly is telling us that we should be selling around these prices. Which are 92 down to 84, 85. Like, we should be looking for a sell signal. So since the week and the monthly, since the monthly and the weekly have shown us key levels and directions, the next thing is to step down to daily and other time frames. Okay, you can see that the support is also there. The support provide buy signals. You can see it. Now let's step down to the daily time frame. In the daily time frame, you will see how it's like if a signal is produced, like the signal from the support and the signal from the resistance, you will see how they flow. Okay, so this is a resistance. So you see the signal from the resistance, it go down and go up, go down again, go up, go down. Like it creates a downtrend first and uptrend, and then a downtrend, like impulsive downtrend, uptrend, and then impulsive downtrend. That's the sequence. Then uptrend and then impulsive downtrend. Okay, so you have to understand these things. Now I'm going to delete everything. I'm now going straight to the 4 hours time frame. Okay, so a trend is defined if there is at least one break of structure. So we can assume that this is a support level. Or why? Because there is a price event that break a structure, that break a level, that break a zone. Like a support was broken. I'm sorry, a resistance was broken and it became a support. Okay, a resistance was broken and it became a support. Okay, now these things are very, very important. So this place, this is a resistance, a support now. Before it was resistance, but after broken is now a support. The rate of change inside this zone is approximately zero, or is financially zero. Okay, that's why price cannot break it and then you start pushing up again. Okay, so in other words, if you are looking for entry in the market, make sure you you map those regions in the chart where the rate of change of price is zero. Then when you map it, what you now need is a trend. How do you know the trend? Like entry trend. There must be an entry trend. Then how do you get an entry trend? You go to 15 minutes time frame or 5 minutes time frame. You can go to any time frame lower. Then wait for price to tap into the resistance or support zone. So in this case, we should be buying because the variable or the function that is controlling this market are support. Only supports are controlling the market. The resistance exists, but they don't control the market. They are there as a trap. Okay, so in upward, like in upward movement, in upward market, or when market is flowing from a support at a monthly weekly time frame, like at higher time frame, like monthly and weekly, then we should be looking for buy, because that first support will create other supports. Okay, but if the market is like from the higher time frame, if the market is flowing from a resistance from the higher time frame, then we should be looking for sells, because the market is going to create multiple resistances which will create sell signal. Okay, so what you need is, when price tap into this zone, you want a trend to exist for you to enter this market. Okay, you want a trend to exist, or that the other ways, you are looking for reversal signals. Okay, so you can see that price drop here and go up, come back again. Okay, now you need confirmation to enter the trade, right? So we have this was a support. The price came and break it to become a resistance, and then when price break it, price came up on it again. You see, so it becomes a support. So we actually need support variables or function to exist for we to believe that our entry is going to work. So we can enter this market here, while our stop loss is just below here. okay, somewhere here, and then we will ride this market up to here, okay. That is several pips, man. Very, very powerful. It's a powerful idea. You see, if you don't do the analysis very well, you could have been buying somewhere here, or you could have been selling. Mathematically, you are wrong. Forex market is built on mathematical uh, principles, so you should have understood this thing by now. Okay, so that's cool. That's cool. Another way we should have entered this market is after it left, because that should be our primary support or major support, or the the strongest support in your entry plan. That should be the strongest support, and then you now have child support. That should be a parental support and child or children support that the parent cares. You basically want to get a reconfirmation when the parental support or resistances are creating their children, and you'll be able to follow along. And what it is if you step down to 5 minutes time frame, the output signal from this main support created another support here. So this is where you should enter this market without fear. You shouldn't fear, because it's a support. Price came there, go up, came up again, go. So the rate of change of price here is 0. You enter here and you put your SL somewhere here. You don't need to go far and put it, but it depends on who you are. If you have enough capital and you really want to be consistent in making profit, you can actually place your SL about another support or resistance. So we are trading support, so it will be about another support, because no matter how liquidity sweep happen, price cannot get there. So you are risking around 0.3 pips to get 1.3 pips. So it depends on your criteria of calculating pip on US oil, but I'm using the point as a way of calculating the pips. But when you calculate the risk reward, you will know that it's massive, because this is 1 point, let's assume that this is 1.5 and the SL is 0.3 pips. So if you divide 1.5 by 0.3, that is 1:5. So risk reward of 1:5 is very, very powerful, okay? But at currently the P value of US oil is $1,000. So based on my system of reading the P, so it is $1,000. So I read the P or US oil. For US oil, I read the P direct as a point. Then the P value should be $1,000. Okay, that's good. So we have understood something, and I'm taking time. This is over 23 minutes. Okay, I'm taking time. So a support create support, and the resistance creates, so one support creates another support, and one resistance creates another resistance. You should have that idea. So it's a kind of sequence. So if we initialize a resistance in space, another resistance will exist probabilistically and statistically. There is no guarantee, but it has probability to happen. It's not 100% certainty, but it must happen. Like both, let's remove that it must happen, but if it fails to happen, maybe it is rare. It is rare. If there is a single resistance, there must be another resistance. If a resistance initiates for the first time, there must be another resistance. If support initiates for the first time, there must be another support. So that means it is a certainty. It is a certainty. It only fails maybe when the sequence of resistances is dying. So the market is trying to start creating sequence of support. Okay, so that's cool. Now let's go to synthetic market and do something. Okay, so we are on volatility 75 index, and we start with the monthly time frame. And what we need to do is the current environment. What is the current environment in the market? Like the most current environment, the most current stuff you can see. Can we map the most current resistance and support and trend line? Can we be able to do that in this monthly time frame? Basically, like the most recent ones. So this is a resistance. This is a resistance. Okay, and support, we can mark, yeah, there is a support here, This is a support. Okay, this is basically what we have in the month. Then can we get a trend? Yeah, we can get a trend. This is a turning point there. Okay, and then this is another turning point. So we can get like trend from past, based on the past events in the market. So we have a trend here. Okay, so what is the rate of change of this trend line is negative. Yeah, the rate of change should be the tangent of the angle. The tangent of the angle formed by this trend line, and then it's going to be negative. So it's downtrend, and because it's downtrend, we should be looking for sell, not buy. We should be looking for sell, but it's not only the instrument we are going to use. It is not the final confirmation. We need the resistances and support to have, like, we need regions on the charts, like we need areas on the chart where the rate of change of price is 0, and you should follow the trend. You should go in the direction of the trend. Okay, because you're supposed to know what signal is. Let's go back and check. A signal is a function of resistance, support, trend line, and time acting in the direction of n, where n is a vector acting in the direction of the rate of change of price with respect to time. That means it is acting in the direction of the trend line. Okay, now we shall only be looking for a resistance. In any time frame of entry, we are looking for resistance because the direction of the trend line is already negative. It's downwards, which is negative. Because it's downwards and it's negative, we shall be looking for a resistance because it is already resistance that can push price down. That means we should be looking for a sell signal and not a buy signal, no matter how crazy it is. In other words, we can delete this support because we don't actually need it. But if you want to trade against trend, like you want to trade all around market, you can just put it. Depending on the strength, you can make some little profit, but the people that are going to make the most profit are the sellers. Okay, so right now we step down to the weekly time frame. In the weekly time frame, you see how market is getting rejected from this resistance. Okay, so we step down to the daily time frame because your entry will be at the lower time frame, like H1, M15, M30, M15, depending on your risk appetite. Because the higher the time frame of entry, the stronger the signal, but your risk reward will definitely increase somehow. Okay, so I'm sorry, your risk reward will definitely reduce, but if you can balance risk reward with accuracy, it's better. So you have to know what works for you. Okay, but in our VIP, we just give you the right signal that wins trade. Simple. So right now, you can see that the daily, you can mark, there's some stuff that's happening in the daily. You can mark some stuff there. Here, price mostly reject from this area, from this line. Let's see. Yeah, price mostly reject from here, and then for the support, price mostly reject from this price. That the next thing is we step down to H4. In the H4, we can see in the previous signals how it flows, how price break some key levels, like you break a support and the support onto resistance, and then it's sold. Okay, so we now step down to 30 minutes time frame. So in this 30 minutes time frame or 15 minutes, it can be 30 minutes or 15 minutes time frame, we shall be looking for what? Sell, right? So in other words, for you to look for sell, you must wait for a buy to stop, right? So when market is buying, it's creating series of support like it's creating series of support, okay? So it created this support. Remember, here is also a support because price break it to the upside. So it created this support, and then created another support. This is a support because price break it. So it created another support. Okay. Now, when it started trading below the final support, so it started trading below this support, meaning the rate of change of price in this zone is 0. It started trading below this support. So this can be our entry. And because this zone is from the monthly time frame, when we notice the price is now breaking level in opposite direction, like it start creating resistance. So this is a resistance because price break it and go down. You can actually by combining the fact that this is a higher time frame resistance zone, and then there is internal resistance that have existed. So internal, a minor resistance combined with a major resistance is going to be a massive signal, man. So we are going to enter somewhere here, and then you hold this trade long, and then when you enter here, your SL will be above another resistance. I'm sorry, about another resistance, because price cannot be able to come to that resistance. So which resistance are you going to use? There is a resistance here because price break here and drop. That means it becomes a resistance. So you can place your SL here, somewhere here, because price cannot come to that resistance again. Okay, so when you do that, you have risk around, this around 5,000 pips, but you are cashing over 40,000 pips. This is mathematical something. Mathematical something. It's one of those stuff we deploy while synthesizing signals. So, okay, but you can do more with your money. You can make more profit if you can actually learn these things by enrolling for our mentorship, or basically you join our VIP signals. So thank you, and keep coming to WINFX Trading. Bye for now.